Has this ever happened to you? You decide that you want to get into investing in stocks. You start doing some research as to what would be some good companies. Maybe you speak to a buddy who has some more experience and get some insights from him. And then comes that day when you set up an account and with sweaty palms, you make your first investment. Then you start to check it out, and with great excitement, you watch as it grows. You decide, maybe this isn't so hard after all. And so you think about some other stocks that you could buy. After all, you should diversify your portfolio, right? Then one morning you wake up and with coffee in hand, you check your stocks. What? How could it be? How could this have happened? Your stock has taken a dip. I'm Andrew, and this is Melissa, and you're watching us here on Porter's Journey. And as you know, we are new to this investing business, as you was aware, and we had that experience this past week. For about a month, everything had been more or less good. We had some stocks that weren't doing as well, but overall, everything was going up. And then this week, everything went the opposite way. In fact, we went from $524 about there down to $495. Not in one day, but over the course of that week, things just kept going down and down and down. And so we started doing some research to see what happens. How do you survive your first dip? And so here's 4 tips on how you can survive your first dip.
So number 1, dips are normal. When we were purchasing or when we were looking at buying different stocks, we tried to look at things that had reputable companies and things that have been around for a relatively long time. There's 1 or 2 little exceptions to that rule that we've made for ourselves. I think that I was the fault for that one. So we tried to invest in companies that had a good reputation. So over a long period of time, these companies have increased, the stocks in these companies have increased. But if you were to look at like a little snippet or, on a day-to-day basis or an hour-to-hour basis, the stocks do fluctuate quite a bit. So they go up and then down and then up and then down and then sometimes down, 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 and sometimes up, up, up. So just know that dips are normal. So just a really quick example, between October 2002 and September 2007, so not about 5-year period, the S&P 500 was up about 52%. Then from October 2007 to March 2009, so that couple year period again, it lost more than 51% of its value. But since then, from April 2009 to the end of 2019, so in that 10-year period, the S&P 500 was up more than 275%.
That's good. Yeah, and I think that's point 2 would be just learn what creates uncertainty and price adjustments. And we know there is an element of risk in stocks. There always will be that, but it's always a calculated risk. And we got caught out a little bit this week. We didn't invest any money, but I'm sure you heard of the proposed merger between CP, Canadian Pacific, and between Kansas City Southern, I believe it is. Railway, that's right. And it's going to be a good thing long term. I think if you own CP, you're in a good position. They've basically got now a path for oil to get from Calgary all the way down to Texas. So I think it's a good thing. However, whenever we were chatting about this merger, then we went away and did our own thing. And we were both independently not knowing what the other was doing. We were keeping an eye on CP because we wanted to be in on that, because in our minds, as we read the market, CP would have instantly went up. And so there was a day when they announced the merger might take place, and then the next day that it was likely taking place, that it had been approved by the board of directors and stuff like that. But instead of the price going up for CP, the price actually went down at the beginning. It's now a week later, it's now started to climb again. And so we were both surprised. We chatted about that. We were sure it would have went up. And so I spoke with a friend of mine who has been investing for a long time. And so he was like, oh, no. He said, often, whenever a company is buying the other company, the company that is buying immediately will go down in value, and the company that is being bought will typically go up in value. And again, that was just something that we had never even comprehended. And when he explained it, it made total sense. But again, just to learn what creates uncertainty and to learn what is going to create price adjustments. And so I think that's now kind of one of our priorities, is just to learn how to read the markets learning how to just see the patterns that are there.
So number 3 is be careful of your reaction. So I feel a bit like in our marriage, Andrew started out
Where's this going?
Started out with higher interest in stocks, and along the journey I've been brought along. But the problem is, the more I learned and the more we chatted about it, the more, I don't know whether my competitive nature has kind of come to the front. So Andrew, how often do you check your stocks?
At least once a day, but often maybe 3 or 4 or 5 times a day.
So, I would like to think I check the stocks less often. I think I do when you start mentioning the numbers 5 or 6 times a day, but definitely I'm checking it on a daily basis. But I think there's a couple of things to remember. Your temperament. You need to be able to weather some of the storms and just not do a lot of things on impulse. And to not do things very, very quickly, but to make sure that you do your research.
Yeah, and I'd watched a couple of videos on that. You've seen them on YouTube, I'm sure, where it's like Warren Buffett or Jack Bogle, and they both said the similar thing, that rather you're never sort of going to be smart enough to avoid all the dips of the market, but it's the temperament to recognize, if you've invested in good companies to begin with, just hold on, be patient, don't have a knee-jerk reaction, and things will work out good in the end if you've done your homework and invested in good stocks. So hopefully.
Okay, and then number 4?
Yeah, number 4 is don't love your stocks because they don't love you. And I read that this week and thought that was just a good reminder. And so be careful of just a loyalty to the stocks. And in that sense, what I mean by that is just be careful. And maybe your dad invested with a certain company, or maybe you really like a certain company and you want to invest in it because you like their product. But just be careful, because your loyalty needs to be to your money, not to the stock, because that stock has no loyalty back to you. Now, of course, we know if you invest well, you're going to get stock appreciation and hopefully a dividend. But be careful that you don't let your loyalty to a stock color your decision making in terms of either the dips or even in terms of when to sell. And so again, I don't think I fully get that.
Have you ever broken that rule?
I don't. I don't know.
One of our stocks in our portfolio is BlackBerry. So that's one that maybe Andrew and I would differ on. I probably would not have purchased BlackBerry. Andrew did. I think he has a little bit of loyalty to the area, so we're just watching and seeing.
It's going to be good. It hasn't been good since I bought it, but it's going to come good. Go BlackBerry, go. But yeah, so don't love your stocks because they don't love you. So again, just in summary, number 1 is?
Dips are normal.
Number 2, learn what creates uncertainty and price adjustments.
Number 3 is be careful of your reaction.
And then number 4, don't love your stocks because they don't love you. So if you have any other tips and hints for us as our portfolio's gone down, we would sure appreciate that. And just again, if you are enjoying the content, just make sure that you like and subscribe and all that good stuff. It helps the channel. But again, just any comments, feel free to add them below. We would sure appreciate that. So have a great day. Hey, just one more behind the scenes tip just to help you in terms of making these videos. I want to show you an awesome picture of what it takes to make good quality videos. And it involves multiple Lego pieces. So you can see that's a hint to making a good video. Bye for now.